Working capital. In this video, we will see the format of working capital. Estimation of working capital. Working capital is the excess of current assets over the current liabilities. So, we need to calculate the total amount of current assets and the total amount of current liabilities. Then, to get the figure of net working capital, we subtract the total current liabilities from the total current assets. And then, after that, we add contingency if any amount of contingency is given in the question then, and then we get the total working capital. Under the heading current assets, there are three types of stocks. First, raw materials. Second, work in process, where the raw materials are converted into the finished goods. And then the third, finished goods. And after that, there is debtors, which is also known as accounts receivables, or we can say credit sales, and then prepaid expenses and cash. And then under the heading current liabilities, there are creditors and overheads or expenses. And all these amounts are calculated for the estimation of working capital. There are two methods for the calculation of working capital requirement. The first one is total approach and the second is cash cost approach. Only the three items are being affected because of following different approaches. And there's only a slight difference between the two methods. And we can follow any of the following methods. But if it is given specific in the question that you have to follow the total approach or either you have to follow the cash cost approach, then you have to follow the rules. But if there's nothing given in the question, then you can go with any of the following methods. If we follow the total approach method, then in the debtors item, we calculate it by the sales amount. But if we follow the cash cost approach, then the debtors will be calculated on the cost price. As in the method itself, the name suggests that it is cash cost approach. So we have to calculate it on the cost price. And also there is the word cash. So we have to eliminate the depreciation part, as depreciation is a non-cash expense. Now, the second item, that is the finished goods, is also affected because of following different approaches. In total approach, we calculate it on the total cost of production amount. But in cash cost approach, we have to eliminate the depreciation part from the total cost of production. As already discussed earlier, as depreciation is the non-cash expense, so we have to subtract it in the cash cost approach because we take only the cash amount. Now again, the third item, that is the work in process. In total approach method, we calculate it on the basis of work cost, and in cash cost approach, we need to eliminate the depreciation part from the work cost. So we have seen that only the three items are being affected by following different approaches. And while we will solve the question, we will see it more easily that how these items are being affected. and what impact it makes in estimating the working capital requirement. We will see the different approaches method followed in the next upcoming videos. Thank you.